Okay, so thank you everybody today for joining us in our SteadyStack AMA with PrivacySmurf for Trading 101. I am joined today by Ali. We're just gonna hand it over to, our guest speaker today. He has a lot of good alpha for everybody, and he's just gonna give you a little intro about himself and what he wants to kind of do in today's AMA. So off to you, man. Take it away.
Hey, thanks. So I'm Privacy Smurf. Terry's my name, my real name. um, I write a small newsletter that's basically about objective trading and understanding um, how to use the market efficiently with as little as possible. This AMA is sort of going to be different. It's not really about putting lines on a chart because that's kind of like the easiest part of trading. Anybody can go anywhere and see how to like draw support and resistance, and anybody can find some trading strategy on YouTube. It's really focused on like how to learn and like build the structure to become a profitable trader. I've been trading stocks, forex, commodities, commodity futures. Um, and crypto is relatively newer to me. I've been doing this like the last 2 years. Started luckily at the bottom of COVID crash with everybody else who is too bored with nothing to do. So it's been an interesting ride. My focus in trading and study is really in cycles, but I'm not going to talk about that. I'm not going to talk about that very much until the end if anybody has any questions. But yeah, really, we're just going to focus on how to trade. Uh, I not how to trade, how to learn to trade. I was in the Marine Corps for 7 years. I was a data analyst for them, and then I worked for a civilian company after that in surveillance. So like most of my job was like understanding and working with data and information and processing it to become like actionable information for the generals and stuff to use and execute their plans. So I really learned how to take information that was out and available and like structured in a way that like is palatable and understandable and executable. And that's what everybody really needs to learn to like do this well. Um, Trading, as you've probably heard and anybody has said, is like it's a serious business. Like you need to treat it like a business. There's like an old quote that like trading is a profession, it's not a hobby. If you treat it like a hobby, you're going to make hobby money, and hobbies don't really pay much. So like that's something to kind of keep in mind. Whole like venture if you want to like expand your trading career. We're going to sort of answer like three questions. One is like how to prepare to learn, then what you need to learn, and then where you can learn that. Um, so first, we'll talk about like how to learn or how to prepare to learn. And what you need to do is like you need to have like a stable financial base. It's like really hard to trade if you don't have money to trade, right? And something that's important is investing like first, like instead of just like jumping straight into trading. Like it's easier to make decisions and execute in the market if you like aren't trying to rely on getting a win or like worried about a loss. So it's helpful to have like a buffer first before you like start getting into speculation. Something that can also help that is like us, working a job, like having a stable side, money flow. That does sort of like cut into like your time to trade and like educate yourself on trading, but the mental pressure that will be off of you will be like immense. Um,
Yeah.
so that's really, really helpful to have. You need to have like the proper tools. Like you can't do any job if you don't have the equipment to do that. So, like if that requires like a computer, then maybe that's what you need to invest in before you start like trying to make all the money you can trading. Um, God, I need to backtrack a little bit. In the side money flow and your buffer from investing, like having capital is also like important. I mean, you can't trade if you don't have money.
Yeah.
Um, but something that's important is like having enough capital to trade. I know it's really difficult to trade with like small amounts of capital because you don't win a lot of money. But one of the problems that we can like get into later, like is like position sizing and risk management. Like if you don't have a lot of money, like suffer through the fluctuations in the market, then you're not going to be able to stay in positions that would be profitable just because of like the random walk of the market. Like there's tons and like me talking a lot. Like if you ever talk to me like more, I'm like really heavy in statistics. Um, like there's plenty of data to support that like if you're trading with an account that's under $3,000, like long term you're not gonna like your account will essentially not be profitable because you can't withstand like the ups and downs of the market with that much capital, like allowing for like a one-to-one risk ratio in like most common strategies.
Hmm.
So what's helpful is using that 3,000 to like do your in essence like paper trading, like you're still trading but like you're not using it as something to try and like boost your account to like be living off of like essentially you'd be working your job or some other form of income that's like you're feeding into your trading account while you're learning to trade. Like the best statistical analysis is showing that like a $25,000 base is like really the lowest level for like professional level trading. um, that's something to kind of keep in mind about your own career. Like
Yeah.
I know it's like yeah, not a wonderful thing to hear, but it's just the math behind everything. Um, so something else that's like part of that, how to prepare to learn. It's like a supportive environment. Like it's really great here in SteadyStack that they've started like the meditation things and like the focus on mental health and physical health and stuff because that's like really important. It's like you can't execute if you like can't think properly or if you're like tired or whatever. Like so, having a supportive environment is like really important. But I think has helped me um, having like I don't do anything else. Like this is all I do. So like what's helped me is having place to work and a place not to work, like somewhere to turn it off. Like I can sit at my computer and I can do, my trading or I can do my analysis, do my research or whatever, and then I can just turn off the lights, turn off the computer, leave the room and never have to come in here anymore and like not think about the market and I can get my head out of like the charts and stuff like that.
Hmm.
Um, Another thing that's like really important in creating a supportive environment is like um, is like your education, like spending time to learn the market, which we're all here to do. Like everyone should, like no one is an expert in the market. We're all students. Like we're all like no one's really a master. We're all trying to learn how the market adjusts and changes over time. As soon as you start thinking that you know what the market is and what it's doing, then like you're going to get your shirt handed to you. So you always spend time like learning your craft and learning the market. Um, Other thing that's part of the support system that we have here in SteadyStack that's like being built out is like peers that are in line with your vision. Like I used to be pretty solitary in my trading career. Like I wasn't really part of any group or anything like that. And it wasn't until like I started, it was maybe like 4 months after I got into crypto where I like started getting into different crypto groups and stuff like that and talked with like trading and stuff like that with different people and like really made um it really made me better because like I can't see in the market. I can't see all the opportunities. Like I can only see, I have vision on and there are other people who will see things that I didn't And there are people who can question the things that I'm doing, and I can question the things that people are doing. And it's sort of like that, steel sharpens steel or whatever that saying is. I don't remember iron sharpens iron, but like really making each other stronger by having that peer group with the same vision.
Yeah.
And really the environment is like super helpful. The last part that's sort of on the like supportive environment is honestly finding a mentor. Um, that is probably the biggest thing that like helped my trading career, was finding someone who thought the same way that I thought, who knew more than I did, who I can just like absorb everything that they did, and like it will propel it will propel you quicker than any sort of independent like learning you could do on your own. And we'll talk about how to do that a little bit later. So that's sort of like the base of like how to prepare to learn, like having a stable financial base and a supportive environment, like the first part of like how to learn to trade better. Um, Now in execution, we're going to talk about like what you need to learn, like the things that are important, and that is there are like two core fundamentals really, and that's like an edge and risk management. Like those two things will lead to your long-term success. You can't really succeed if you don't have a good understanding and implementation of both. If you have an edge in the market, that means you have some strategy or you know something or you're involved with certain people or whatever, like, or you have more money than everyone else, so you can do stuff in ways that other people can't.
Mm-hmm.
Like, if you have an edge, but you don't have proper risk management, then you may make money, but you're going to give it all back. Have good risk management practices, but you don't have an edge, then the market is always going to beat you. And so you really have to have both of these things to continually be profitable. Um, like this is all stuff that a couple of other people and I have been trying to flesh out to build like a sort of course around these concepts and stuff like that. So be kind of on the lookout for that in the near future. But
Definitely.
anyways, in the category of an edge, you need to understand the like baseline core market concepts. And in my opinion, that would be support and resistance, trend identification, and momentum. If you can understand those three things and identify them and observe them in the market, it doesn't really matter what trading strategy you're implementing, you can be successful in it. Or you can have literally no specific trading strategy and still be profitable. Like those three things will really make or break any sort of system that you're trading with. So like those three should be the focus of bulk of your like application and practice and practical application. Um, that will be something that carries across every single way that you like make a trade. Um, Second part in having an edge, identifying inefficiencies in the market. And that's like a big, broad term, but it's mostly just looking at like we'll go with a basic example of like fear and greed, like buying when everyone is fearful because you know the market will go up and they're filling all your buy orders. Like that is a market inefficiency. Like everyone is selling when they shouldn't be because the market's going to go back up. So like being able to identify this moment in time is like is an edge. So you need to be able to identify these different types of inefficiencies. Another like basic inefficiency is like I hate these, but like moving average crosses. Like if you look back in time and you notice that like the last 30 times like the 5 moving average crossed over the 40 moving average and price went up like 10% every single time, well then that's an inefficiency that you can exploit, because you have identified this one thing that it like is consistently repeating and is profitable that hasn't degraded over time. So that's part of like creating your edge, understanding the simple market concepts, identifying inefficiencies, and exploiting the inefficiencies. And exploiting inefficiencies is really just like your trading execution, like having profit targets and stop losses and a sort of trading plan, like some way to implement every order that you've got. Like that's part of how you exploit the inefficiency. You have to learn how to properly set the right type of trading orders and um, understand not to like get out just because you're afraid of something or whatever. So those go into creating your edge. Risk management, the other side of the things that you need to learn, is something that gets ignored a lot and also is done poorly, is position sizing, trading with either too much money too soon or too little money to not actually make any money. Like these are all things that are sort of ruin you in the long term. A lot of people use position sizing based on like a percent of their account. Like they'll like say I've got $1,000 account, my position size will be 1% of that. So like every single trade, I'm using 1% of my account. Well, that's sort of an inefficient way of using position sizing. Position sizing should be done based off of your stop loss, not how much you're wanting to trade with. Proper positioning or position sizing will say, I will lose 1% of my account if I go to a full stop. So that way, it doesn't matter how much is like, it doesn't matter really like what asset you're trading, you're always risking the same amount every single time. Like you're always just risking 1% of your account. Because if I risking 1% of my account on Bitcoin, then like not really buying a shit ton of Bitcoin. But if I'm like risking 1% of my account on like uh, the smallest micro cap, then I'm buying so much of that micro cap. It's like insane.
Hmm.
Um, so you don't want to base your position size on like just how much money you have in your account. It should really be on like the distance from your stop loss. So like you're losing the same amount of money on every single trade you make. You won't get like super huge wins, but you have consistent growth, and that's really what everyone should be aiming for, like consistency in like their wins and losses. And it doesn't matter because you can apply that to whatever you trade on. It's whatever. Second part of risk management is creating a trading plan. Stack is doing pretty good with that. Like they have like there's a bunch of spreadsheets that show how to document your trades because documenting them is important. Like how will you know how well you did if you don't document what you're doing? Um, so creating some sort of either just tracking methodology or creating like a long-term plan, like how much you want to grow your account over a certain amount of time, like create these benchmarks so you can see like if you're overestimating your abilities or if you're like keeping track with them, whatever. Like all these things like go into creating a trade plan, which will help you manage like your risk in your account. Do have a trade and development thing that I'm working on to share with everybody. So that'll also come later. And it's one that I use literally every quarter. Like I do five trade plans throughout the year, one at the beginning of the year, and then one each quarter. Because in my history, it's fine that executing in a 3 to 8 month time frame catches most cycles in the market. Like I'll get the full extent of an up and down move in that amount of time. So I'll typically do my analysis and prepare over that length of time and then evaluate like as we go through. Um, so yeah, trade planning, building a trade plan is like very important to like your risk management. Other feature of like that side of things is back testing and optimization. Back testing gets really underutilized. It's probably what I spend most time doing. Um, there's so many strategies out there. Like there are tons of them. And any point in time, someone can show you this strategy that like has a, 98% win rate or, 70% win rate with a profit factor of 27, 27. So you're like winning $27 for every one, that you put at risk. But it's like maybe that strategy only really works for like that 2 week period of time, or it had like three really big wins and then like 92 horrible losses. So
Yeah.
it's like if you don't understand like how to analyze a strategy and look at how it performed over time, you can't have idea of how it will work into the future. Um, and going back to the identifying inefficiencies part of the edge category, like I've been getting deeper and deeper into like quant trading and stuff like that. And back testing is like a huge part of that. Um, most strategies that exist in trading they fall in three categories. You have trend following, breakout, trend following, and mean reversion or counter trend. Like the general flow of the market is the market moves up, there's a breakout to the upside. You can trade the trend to the upside. There will be an overextension in the market and it will revert to a counter trend. So you have like your counter trend strategy there. Then you have like a bearish breakout, which leads to a bearish trend, which leads to a bullish counter trend, which leads to a bullish breakout. So it's just have this flow back and forth, like this wave motion. And those three different categories of breakout, trend following, and counter trend, like there's not a lot of um, not a lot of new things that exist in these different categories. There are new ways of using different like indicators in the market, but most things are variations of stuff that has existed a long, long, long time. So you can backtest all these different strategies and you will find through most cases there's like a rubber band effect of effectiveness of a strategy. Like one of the oldest strategies that I've used for a while is the Donchian channel, which is using a channel created of 20, like it's using highs and lows of like a 20 bar or a 40 bar period to create a channel. And as the price closes above a high, you go long. If the price closes below the low channel, you go short. And like that's it. That's the basic breakout strategy. And this has existed since like the 1920s. And there was a group of traders called turtle traders back in the 80s and 90s who like bank like tons and tons and tons and tons and tons of money trading this strategy. And it was like all they taught. It was just a fund based around using this strategy. And you analyze the strategy over time, the Donchian channel was like really effective for a long time. And then in like the mid 90s, it just like cut off and died. And it's like barely profitable year over year anymore. So like this goes back to identifying the inefficiencies in the market. Like over time, more people will see you're doing the same thing every time, more people, and you're making a profit, more people will see that and they will start doing it. Or it will, if you're reading something out of a book, you're not the only one buying this book. So, like, other people will be trading the same strategy. And as this happens, more people are executing on the same idea and either undercutting each other or like it's just whatever's happening in the market to make that profitable will just start getting smaller and smaller and smaller and go away. As that happens, then in time, people stop trading that strategy and it stops being like, since it's not profitable, no one's trading that setup anymore. But if over a longer period of time, then the fewer people that are trading that strategy, it comes back into being profitable again. It's like you can't just like look at some strategy and say like this is good because look, it's successful right now. Well, like it may be successful right now, but it may be like crap given, the long history of the market. And like maybe if you don't use it, but you know it and you like analyzing and back testing it, you can see when it's starting to become profitable again, or you can identify conditions that make it profitable. So you can like look for when the market is ranging in between like an ATR of whatever, and like this is when I'm going to implement this one strategy because it worked really well here, but it doesn't work anywhere else. Like you can't do that if you don't know how to backtest or understand like optimization of different trading strategies, because you can't just trade one way and expect it to work time. Like it's just not possible. The statistics do not support that at all. Um, the last part of risk management is diversification. And if anything, like this past cycle like shows, that's very important. Like if you are all in one project and it goes tits up, then like what do you do then? Um, and diversification also just from a grander perspective, like being 100% in crypto, like is not, even if you're in different projects and different ecosystems and whatever, that's not diversification. Like that's not going to protect your long-term growth. If like that's what we're all going for, that's something that you need to understand. Like, yeah, you can't all be in a bunch of different crypto because like term, that's not going to be like the greatest. That's also not like a popular opinion, but like,
Yeah.
having assets in both cash or different currencies and crypto and real estate and metals, just all sorts of different things. Like that's really the best way to like protect yourself and preserve your capital, because like that's really what everyone's goal should be, just preserving capital. It's not about like how much money you can make. It's like, because you can't control how much money you can make, but you can control how much you lose. Like that's absolutely doable, to a certain degree. um, you also can't control the market, and you can't control inflation, and you can't control all those other bigger factors, but like you
Oh
can
yeah.
you can control how much you're putting at risk, and you can mitigate that. So yeah, edge management, if you have both of those things, you'll be successful. Last part's really easy. It's kind of where to learn. In my opinion, books is the best way to learn. Yeah, there's a lot of good YouTubes out there and stuff, but you aren't really well versed in like the level two part of this, like the edge and risk management part, it's going to be really hard for you to figure out what's good and what's bad, because everything kind of looks good if it's on YouTube. Like no one's making videos be like this strategy shit, like that's not a thing. So everything kind of looks good, and it's hard to tell like the good stuff from the bad stuff. One thing, going back to like my part about building a supportive environment and like finding a mentor. What has worked for me is really finding someone who thinks like me. And there's a series of books by Jack Schwager. It's the Market Wizards series. It's like his first book, Market Wizards. Then there's New Market Wizards, and then there's Stock Market Wizards, and there's Hedge Fund Market Wizards. Like that is a book series where he just interviews like these successful traders going from like the mid 80s to like I think it was around 2000 was when he stopped doing these series. Like the hedge fund one is one of the more recent ones, but this was like interviewing top traders from years ago. And what helped is reading like these candid interviews with the different traders where they talk about their history and their strategy and like how they sort of got into the market and like how they learned and like the things that they did. And like those types of interviews of a bunch of different people like really helped, because you get this window into like how someone's how someone's brain worked, like how they think. And like
Mhm.
if you can find someone, which you should, because there's like tons of people in these books. Like the first one has Paul Tudor Jones in there with like a bunch of a bunch of other people. Like if you can find someone who thinks like you, like if you read what they're writing, be like, oh shit, that's like exactly like I agree with this. Like this is me. Then like dig into literally everything you can find about that person. Like find everything they've ever written, every group they've been a part of, like whatever. Just find as much as you can that they have like created or done, because finding your style is like the most important thing.
Yeah.
Like you have to have those like three basic concepts, but then a style that like fits your mentality because that will be the easiest thing to start implementing in your own like process. Um, you can take my strategy, which I'm primarily like a counter trend trader. Like I love trading divergence. Like that's probably what's been the most profitable for me. I love it so much. And then like trend following and swing trading is like probably my second. But like I really excel at like the counter trend stuff. But like it's not an intuitive process, because you're like trading against the trend and you have to understand that like trend isn't just one time frame. Like I can be looking for short trades on like a daily bullish trend in like the small intraday time frames, or I can be trading both long and short on something on two different time frames and still be in like a long-term long on it. Like it's not like multi-time frame like trading really requires like the ability to understand like all the flows, of the different time frames. And like it helped to find like a trader who excelled in that and was able to like break it down and show me the ways that they like executed. So really like reading books about different traders and like how they traded is like super important to me.
Yeah.
I think that's like a really good way to like into your first like style of trading. Like give like find somebody that thinks like you, execute in the same way that they executed, and give it time to like learn the process and like have some wins, have some losses, and like see if it works. If you can't get any of those books, then just dive through a bunch of comprehensive like YouTube videos or whatever about a different trading style. And don't go deep into them. Just do like surface level things, like skipping from one strategy to another strategy to another strategy, just reading what they are. Whichever one makes the most sense to you without having to get in depth, like start there and just go as far in and as deep as you can on it, and like the ins and outs of it, and try to execute on it. Um, like the mentorship and that style of learning will really help you in your trading to like improve. Um,
There's a
a
great
couple
YouTube
last
channel.
questions.
I just want to say, I don't know if you ever checked it out, but it's called Chatting with Traders. So it's kind of similar to like the Market Wizards, where like it's just like a podcast that the people sit down with a bunch of successful traders and just talk for like an hour or two.
Oh, that sounds great.
Yeah, and that's one that I'm a personal fan of. This dude just goes around just uh like gets a bunch of hedge fund traders and everything. Any person in the game just sits with them and just talks to them for like 2 hours.
I'll have to look at that because that actually sounds really interesting.
The name
Like
of the
even
channel
though
was?
What was that?
What was the name of the channel?
Chat with traders.
Gotcha. I'm just gonna drop the link in the chat. Carry on, Smurf.
yeah,
Sorry.
it's okay because like even though like I have the strategies that I've been using for like the last, like I haven't changed much in like the last 3 years. But like even though I have those three that I execute on, like I still spend most every day like looking up different things or reading a different book about a different methodology, or hopping around in different trading groups and stuff and just like seeing what it is that other people are doing, because like I don't know that I have the best way. Like
Yeah.
I assume that I probably don't. Someone probably is better than me. There's always someone better than me. So like I won't know if I don't like look for it, right? So like I think it's really great to just like spend your time like perfecting a strategy, but then like keeping the learning going. Some last little thoughts before we open up for questions. That's important to like your learning process and like also your long-term success is like take credit in your wins and reward yourself for them. Like that's something that I think gets missed a lot is people will have like these huge wins, huge wins, huge wins, and like thinking they're a genius or whatever, and then they end up like giving it back because they aren't a genius. But like if you take time out to like credit yourself for that win, like you you like realize some of those gains and also like sort of self affirm like your success. You know, you make it real for you. Um, but the other side to that coin is like accept all the responsibility for your losses. That's something that also gets like done a lot where people are like will blame someone else or the market or they'll blame like they'll be like, oh well, the market, no one can predict the market. Well, like that's dumb. And you're like, yeah, that's true, but also like that's not an excuse for like your losses. Like you need to accept the responsibility. Like you either made a bad decision or whatever. Like there's just
Yeah, no one else hit the
taking
buy button.
credit. Exactly. Like you need to be able to accept that responsibility, and that will help you like learn from that mistake, and in real terms. Um,
And
Me
I just
personally,
want to quickly also recommend on that last point that you just made about accepting losses and everything. The book Trading in the Zone by Mark Douglas is a great way to frame your mind in taking the losses as well as wins. So I highly recommend that for you guys as well.
that's also one of the books that I do like. I wasn't gonna mention any of the books that like have been in like our book list before, but that is also a very good book. Um, just some other last things from me. Me personally, I avoid the news. I don't really watch the news at all. Like I do sometimes engage in like lower levels of like hype news, just so I can like see what retail is hearing. Because I can't really expect to know the psychology of retail if I'm not exposed to it. So that's something I try and keep an eye on every once in a while, but like I am under the belief personally that like news doesn't drive the market. Like the technical factors and money drive the market. News can propel and accentuate moves, but it is not cause of things. And sort of on that like cause and effect case, like one of my in psychoanalysis, one of the pioneers of psychoanalysis, Edward Dewey, like he has this one quote that I like go back to all the time, but like it's basically like if you're trying to find the cause and effect of things, like you'll never find it because like have limited knowledge. Like we don't know everything, so like there's no way we can identify like all the minutia of things that had to happen to cause something else to happen. So I personally ignore the news. Like I don't spend much time on it, and I've been trading profitably for a while now. So it's not something that you have to, like, don't feel like you have to keep on top of the news to be like successful because I don't look at like any of it, and it's fine. Um, like I just trade the technicals. I'm purely a systematic and technical trader. I generally prefer being a systematic trader is more important. The two types of trading is like systematic and discretionary. Discretionary would be like making some gut decision on your trade, where systematic would be like XYZ conditions exist. I will execute on that every time XYZ condition exists at, a risk to reward of 1 to 1 or, some stop loss at whatever. Like that's systematic. And like there are two metrics that are put out by like this gigantic fund that basically track funds. They have two indexes that track hedge funds that are discretionary and systematic, and there's only been like 1 year period in like the last 20 years that like discretionary trading beat out systematic trading. Like quant trading is literally like the best way to trade. Like being systematic will always beat discretionary statistically. Like I'm always in the side of making some rules and sticking to them because then you can also like measure historically how well your rules are, like
Yeah.
what works, what doesn't. And all I
Do you
got.
wanna open the floor to questions now, Privacy?
Absolutely, absolutely.
Awesome, man. And then yeah, thank you
Uh,
again for that. I know it was long, but that was awesome, man. I hope everybody was taking notes. We have it recorded, but that was really that was gold. Thank you for that.
For
Problem.
sure.
All right, so
Do
All
have
right.
the
we have the
have the chat questions up.
yeah, if you want to look at them yourselves, like we can read them off to you, but if you want to look at them yourselves, it's gonna be in the AMA
I can.
questions channel, and it's gonna be just yours, the Privacy Smurf AMA Trading Questions 101.
Yeah, yeah. So
Yeah,
I
I
did
think
the
you got
first one.
Jay Castro. I
First of
think the
all,
next
I'll
one's Mark.
reiterate it again. Um, how long? 8 years. Started in stocks and got my shirt handed to me. Stocks are stupid. Like people think crypto is irrational, stocks are irrational. Like there's no reason. Like I mean, just go back to like Peloton. Like they crashed one day because some dude on a TV show died on a
Yeah.
Peloton. Like there's no reason that like stocks should go down because of that. But anyways, um, yeah, 8 and profitable after two. That's kind of really common. Like the goal for being like this is also statistically based. If your trading career isn't over 60% in a year, then you probably shouldn't be trading because you can do that investing properly. Um, so that's some sort of metric to keep in your mind. Like after like first year, just try to be break even. Second year, if you can double, that's great. After that, like if you're not maintaining 60% gain, you probably shouldn't be doing it. Um, this question is longer. Any valid tips for a newbie? Lessons you only learn with experience. Like I was saying, avoiding the news is one that I think I only learned at experience because I used to like follow on a bunch of stuff and listen to listen to the hot tips and all that kind of stuff. Like really, that's not helpful. Like if it's something that you see out on the news, it's already known and like it's not going to help you. So really just kind of like avoiding the noise. Recommended apps for trading. I do my stocks are in TD Ameritrade and like Thinkorswim or Webull. Webull's a really great mobile application.
I
Like
love
it's really
Weeble.
good for
Yeah,
yeah,
it's
for what it
super
is, it's
simple.
amazing. Um, I'm lucky enough to be able to trade FTX Global since I have a company that's based in Denmark. So I can just register there and trade through FTX Global, being a U.S. citizen. Otherwise, KuCoin's fine with a VPN. They have enough liquidity to really trade well. Three commas, like it's basically like swim for crypto. Like it's a third party. It's not a broker, but it's a third party platform that connects to your app to your APIs to like a crypto exchange. Like it can control your order execution, and you can have bots, and you can have trailing stops, and you can have trailing buys, and you can have profit targets. Like three commas is my daily driver in crypto. Like I don't make a trade if I'm not on three commas. It's amazing. So that's my recommended app. Um, the 2 years not profitable at the beginning of your trading career. What was the main factors that made me lose? Over trading. Over trading. Um, like I felt like I always had to be in the market and always had to like trade on something that showed up. Like patience and learning that there's no end to the waves. Like you don't have to take every one of them. Just take the good ones. Like it's all about high probability setups for me now. Like I don't care about most things. I don't care about other people's wins. I try not to even pay attention to that because that just makes me feel like I have to live up to their standards and I don't. I only have to live up to mine. No one cares about my portfolio any more than me. So like
Yeah.
it Other people's stuff doesn't matter to me. So like I focus on consistent and only taking high probability trades. So like over trading and trying to catch every wave like really wrecked me early on. Also leverage. You got to be careful with leverage, man. And that goes into like having a proper, monetary base to trade with. If you don't have enough money to like really make money on a single trade, there's more pressure to use higher leverage, and that's just a recipe for disaster, in my opinion.
Yeah,
I
and
have a question.
Um,
Oh, sorry. Go ahead.
what's that?
Oh no, sorry. I thought you were done. My bad. But I have a
Okay,
question
yeah.
after this.
Minimum account size. I like paper trading is cool, and I think everyone should paper trade just to become familiar with order execution, like how to use a specific exchange or how to execute a particular strategy. But nothing will give you experience like using real money, like nothing. Because you can be a paper trading billionaire, but as soon as you put in like your first order and you lose it because like it went up like 5% and then it like went down, 5%, and you're like freaking hell out, but like it's gonna come back and be fine because your analysis was correct. Like, that like if you can't handle like that emotional drama of going back and forth, then like it's gonna hurt you. And like having money to like withstand that is important. Yeah, but like 3K is a good. I mean, 1K you could probably do it, but like you're really setting yourself up like poorly. 3 to 5K is probably fine to have like decent trading, but without using a lot of leverage, and like you can consistently build that up. But like I was saying, stats based 25K is like the minimum for professional level trading.
all right.
Um,
Gotcha.
where am I at? How many hours per week do you work on trading? Well, I mean, it's all I do. So, like, I primarily trade on the daily time frame. So I'm not really making a lot of intraday trades in crypto specifically. Like, I'll only do it when like the time is sort of right, and that gets out to about like 3 weeks out of the year when crypto's like super duper hot, and then you can take really higher leverage trades with like little amount of capital. I'll put like $1,000 into like a single like sub account and just trade everything with like 25x leverage because like they're all popping off like crazy. And at the end of the day, I'll just like close out all the extra and just put it back into my normal trading account and just like rinse and repeat every single day because it's just like everything's flying. You can throw a dart and like make money. But that's not very common. It doesn't happen a lot. Um, but like I'll wake up in the morning, I'll update my charts, from yesterday's close, and then I'll, manage my positions that I'm in, look and see if anything had an alert go off, and then after like the first hour or two of like looking at the chart, then it's either doing some research on my own or like, doing whatever, living my life, or sitting in chat with everybody here or whatever. I mean, I'm always doing something to stay engaged with the market because if you like stop looking at it, then you kind of lose your bearings on it. But I'm not like always looking at charts. I'm just doing some sort of research around like market, some sort of analysis. Like there's never any end to learning, in my opinion.
Yeah.
My personal favorite strategy, like I said, divergence. Like I love divergence. I built an indicator based on it and sell it. Like it's literally how I trade. Like that's divergence. Like it's amazing. And divergence is when you have a price action oscillator. Well, you have price either setting a new high, and you have a price action oscillator like the RSI, not setting a new high. So you're showing like weakness in the market. Like think of it like an auction. Like at the beginning of an auction, like there's tons of hands going up because like it's cheap and everyone can buy it. And like as price is going higher and higher and higher, like there are fewer people bidding because fewer people can afford that price. And at like a certain point in time, once like there's only one person left in the market, like in the analogy, the auction is closed. In real life, in the markets, like when there's only one person left to buy, price can no longer be supported, it goes down. Like that's recognizing that weakness in the market is like huge to counter trend trading. like doing my cycle analysis and also looking for divergence, like I have posts and stuff about that I've written, was how I like identified that the market was going to crash back in November. Like I got out of most of my positions because it was showing historic and unprecedented weakness in the market. So divergence is amazing. The best way to backtest is um, either learning to code or doing a lot of visual testing in TradingView or something like that. Don't know too many good like manual back testing platforms. Um, but also you can't really back test unless you have a strategy. Like if you know some particular condition that you're executing on every time, then you can, just look back on the charts and the history to see, how well it performed. Ideally, like most back testing, you're looking for like a 1-to-1 risk reward ratio on the daily chart. That's like the standard, essentially like $100,000 account, 1% or 2% per trade with a 1-to-1 risk reward ratio based on some condition. And like you just see how well that performed in the past. And if it did well on the daily chart, then you can like start testing in other time frames and stuff like that. But if it doesn't work on the daily time frame, then there's probably no point in doing it because like you compare things to like intraday trading and daily trading. Like you have to get into like time or profit per position per time. So it's like if I can hold something on the daily time frame and make, $40 an hour, where I have to make 30 to 40 intraday time frame trades at like, 10 cents an hour, um, that's not the right numbers, but I'm just trying to make an example. Like if I have to make 30 trades on like a smaller time frame where I can just make one trade on the daily time frame, it's better to just make that one trade because you have the least amount of risk and least amount of fees. So, and you're spending less time in the market. Like physically, like I can go do something else, some other way to make money and not be like sitting here 9 to 5, like freaking, trading in and out of the market. So that's something that like you also can't learn unless you start doing back testing to see where you're optimally spending your time.
Mhm.
Challenges for me, how to trade wisely.
Well, we have a ton of great questions in the AMA questions thread, but I want to just add, because you said you were okay with it, Privacy, that if anybody wants to come up and speak and talk to Privacy himself, I think we have Brian waiting if that's cool to let him up.
Hey, Brian, thank you for coming up.
Hey guys, can you hear me okay?
What's going on, Brian? Yep, we can hear you, man.
Happy early birthday, Brian.
Thanks.
Yeah, the 19th,
Privacy.
the big 4-0.
Big 4-0. Hey, long time listener, first time caller. Thank you. Really, really enjoyed this talk, man. I'm realizing I owe you a voice chat, and like you're the yin to my yang with my emotional investing and putting your technical analysis to things. I think it's going to be a great match. Couple things. I just got that Market Wizards book. Thank you. Bought it on Audible. I'm going to listen to that. I've noticed in crypto, you mentioned before about consistent growth. And I oftentimes see that people don't look for that in crypto. They look for home runs or grand slams. They don't protect themselves on the bottom end with stop losses, and they don't take profits when things go up because they think it's going to go up forever. So can you talk a little bit about your approach to, let's assume you take X amount of money, you put it in, what would you set a stop loss at? And at what point would you take profits? And then how much would you leave in for a long position?
So this goes down to goes down to like a particular strategy because each different strategy will have different rules for that. So let's say the home run plays are really in trend following, like a breakout to a trend following strategy. So like I operate a little bit differently than most, and it's sort of a recent transition, which I learned from learning from my mentor. I found who my mentor's mentor was, and I learned his strategy, and it's amazing for this. But anyways, like if I'm building a long position over the market cycle, so like three to 4 months or something like that, like I'm not looking to buy things as they're going down. I'm waiting for a trend to be established. So like I'm not getting that breakout. So like I'll miss the breakout, but I'm buying at like the first retracement on strength of like the market. Like the breakout shows like we have consistent strength and a retest at support, and like that support holds. I'm buying that strength right there instead of buying weakness on the way down. Like I rarely DCA down into positions. So like my profit will be at a specific, resistance level above us, and like I'm taking out 40% of my position there. On the next retracement down, I'm adding to that position with like the amount that I like took out, like the same volume that I took out, and I'm putting it back in, and I'm keeping that profit that I basically like made from that first sale. Like say if I bought like 100 of something, I'm selling $60, or excuse me, I say 40. I'm selling $40 of like whatever I got, and I'm buying that back in lower, that same 40%. And then, or not 40%, that same 40 of whatever. And like as the trend keeps going higher, I'm building a bigger and bigger and bigger position while I'm still keeping profits. Like I'm still taking profits out of that as it's going up. So I'm building a profit bag, and I'm also building a bigger position in the thing as it's getting stronger and stronger and stronger. So when we get to the eventual peak, then I'm selling out of the entire thing. Like I don't want to be exposed anymore. Because and Luna is like the perfect case. Like I don't know when the market peaks, like what's going to happen. And I don't really care what's going to happen. I just know that there's weakness and I just want to be out.
Nice.
If it
Perfect.
goes higher, cool. It doesn't matter. Like I've made my money.
I love it. And let me just have one follow-up question. At what point do you literally take profits out of the market? So literally out of your portfolio to go
That
and
is determined based on the time frame of the trade that I'm looking to trade. Like if I'm trading the market cycle, like the standard market cycle for crypto, like I think that's around like a 3 to 4 month period. So like I'm selling out when the daily chart and the weekly chart are both showing weakness, because like that time, like the weekly chart, once it starts showing divergence, like that's typically when, sorry, I had an alarm go off. That's typically when like the market's going to start to retrace significantly. So like if the daily and weekly, like I always do things based off of like market dictated actions. Like I don't set like a percent or whatever, because like that's arbitrary. That doesn't mean anything. Same thing for my stop losses. Like the market doesn't care what percent I can lose. Like it doesn't matter.
hmm Yeah, I've learned early on that setting a percentage stop loss in crypto is not a smart move because it could dip down there at any given moment, wipe out your stop loss, and yeah, I mean, I've done that too many times.
And so like I have the benefit of like being able to be somewhat attentive to the market. So I don't use just like a typical stop limit order. Like I will execute on close orders. So like if I have a stop loss at like $30,000, the daily chart has to close beneath $30,000 for me to get out. Because like one of the methods that I trade, like the divergence system that I built, like there are many times when price runs straight to that stop loss and just shoots right back up, but
hmm
rarely does it close below the stop loss. So like that's usually
Definitely.
how I execute.
Awesome. Well, thank you very much, man. Looking forward to learning more from you and really great AMA.
Absolutely. Thanks.
Smurf, I got a question for you. Um, so do you ever struggle with confidence as a trader? Or are you just confident in your system that you don't like, you know what I mean? Like less confidence in yourself, more confidence in your system, if that makes sense.
That is a good question. And that is one of the benefits of being systematic. Like you don't have to trust yourself in the beginning. You can trust the like system. And it's like one of the biggest problems is like a lot of people abandon strategies after they've had like a couple losses in a row. Like most back testing on strategies will show that they can go through periods of like at a minimum 7 to 10 losses in a row before like it starts to go through a profitable season again. So like you have to be willing to like do the work, know how the system, performs, and like trust through those like losses that like everything's okay. Because like you could be abandoning a strategy that's like really good, but it's just having that like bad period because every single strategy has that. So like building a system and like understanding how statistics work, like you don't have to be like a statistician, but like you have to understand like what the numbers actually mean when you're looking at a back test. Like you can have faith in that system, not necessarily in yourself. And like once you execute on that system and like have some losses and then have wins and have more wins and start becoming more profitable off this one system, then that builds that confidence. Like you're not going to start out with confidence. Well, you will, but that's because you don't know any better. Like everyone goes through that phase of like thinking they know everything because like, but that'll get broken and then you'll get it back.
Yeah.
Yeah, I was gonna say love it, man. I just want to make sure that we're not stepping on too much of your time. I know we kind of just hit on the hour mark, but we still do have a few more questions. Just wanted to kind of touch on that and see how much time you had.
I'm good. I don't have anything else today, so it's
Awesome.
fine.
Sounds great.
We can address all these chat questions before we stop if you want.
Perfect. Yeah, I put a thumbs up on pretty much the ones you hit. I think you kind of left off on the back test one.
Yeah, like honestly, it's just like picking a particular strategy with conditions, laying it out, like plotting them on the chart, and then just loading it into it like an Excel spreadsheet. Like I've got a spreadsheet I can share if anyone wants it, but like manual back testing is very time consuming. It's important, but it is very time consuming, and you have to understand that. Like it's easier to do this in stocks than it is in forex and futures than it is in crypto because like the platforms just don't exist. But like I can load a strategy up in the trade station or thinkorswim and like get the back test results right then. But like that really doesn't exist in crypto yet. Like I'm sure it will, but that's also one of the keys to know that we're early because it doesn't have all the easy shit yet. um, so
If
that's gonna be
anyone's a builder, that's a business idea right there.
really for real because most of the time you're limited to like coding something in Python. Like that's it yourself is kind of the only way right now. There's a program called Backtrader that's like pretty good, um, that I've not used successfully well because I'm not good at Python. I'm working on it. One of the challenges for me, how to trade wisely when you have a career. Yeah, that's really tough. Like my transition, I was lucky where I had the downtime after my military career. If you're wanting to do it while you're also doing another job, you're literally just working two jobs. And you just kind of have to parse that out as best you can. Stick to higher time frames, the daily time frame for like your actual trading. But when you have time to look at the chart, like look at smaller time frame charts, like the 20-minute or the 15-minute or the 30-minute or something like that. I wouldn't really get down to like the 1 minute for like learning purposes. Yeah, you'll get a lot of screen time and a lot of price action, but that small time frame is really difficult because you can have successful trade strategies that just get destroyed by market noise. So like it's difficult to like really get your chops on like a 1 minute time frame when you're using different strategies. Top five beginner books. Honestly, like their book list that they have, amazing. I don't really have any books specifically that aren't like general that I would say to get aside from the Market Wizards books that I talked about. Um, for staying level-headed and not getting emotional. Be systematic. Discretionary trading is for the birds. Like find a system to trade, specific conditions, and just execute on those. And then you don't have to worry about like yeah, there will still be emotions, but like your hands are off. Like you know that you followed the rules, the checklist, and like that's it. You don't have to do anything else. Um, the YouTube series was chat with traders. Yeah, it's down there lower. So I decide my entry and exit rules. That's dependent on the strategy. Like say, like you'll come with like back testing. Like say I'm doing a moving average cross strategy, the generic strategy, like the base, like oldest one, it's like the 10 and the 40, 10 hour, or excuse me, 10 period moving average crossing over the 40 period moving average. It's like the I think that's like the base testing model. What you would do is you would say like at this cross, like the one risk to reward ratio, like how far, like you would just run that if it was profitable or not. So if it was profitable, then when you have your backtest results, like you get to see like your max favorable excursion, your max negative excursion. So you can see how much price went in your favor at any one point in time once you entered. So once you know how far on average price went up from an entry, then you can set like that level or just under, like say it always went up like 2 or 3%. So like you can set your profit target at like 1.5% and then back test that. So like at a 10 period moving average cross, how many times did it go up 1.5%? If that was profitable, then boom, there you've got your strategy.
Smurf, would you say it's like this is just something I've been thinking about, but like more of like reactive trading rather than predictive trading? Like,
I mean, that's like everything honestly is reactive. Like there's a model that I learned like a long time ago that's part of the structure that I'm building out for everybody here. It's like the setup, trigger, follow through method, where you have a setup would be both. It could either be reactive or prediction. Where like forecasting, like doing cycles or Elliott wave or Wyckoff, those are all like predictive, or Fibonacci time series. Those are all predictive models. And you can use those as your like setup. Like you're not executing on like a prediction because price action is king. Like nothing has to follow any model if people just decide to not do that. Like I could have every single model that has like fantastic success rates that say price is going down, but if people just keep hitting the buy button, my model's going to be shit, right? Like it's not enough to have like just one or the other. It's really kind of both, if you will, or just having reactionary. Like if you have predictive models, then that will help you to like have a setup that you'll know what's coming sort of ahead of time, and then you'll look for price action to confirm that or not, or invalidate that. So it's kind of a best to be a blend of both. But if you don't have both, like if you haven't learned a predictive model, that's fine. You can just trade reactionary. Because price action at support with momentum will like tell you everything, in my opinion.
Perfect. We do
Your
have
question?
Strider wanting to come up if you want to take another live question before we
Go
get
for
back
it.
into. Awesome. All right, Strider, you're all set to come up and speak, buddy. Thank you for coming up.
Hey, PrivacySmurf. Thanks so much for the session.
Really quiet.
Is it still quiet?
Yeah, just a bit. See if you can maybe get a little closer, maybe bring it up a little higher.
Yeah. So yeah, thank you so much for the session. I guess this really saves us a lot of losses and a lot of time, in learning strategies which may not work. So this is like invaluable stuff. So my question is that do you trade NFTs or do you completely stay away from it?
Don't. This will be like, well, this will be the first NFT project that I even like ever heard of. Well, not heard of, but like ever participated in.
Nice.
And it's interesting because like it's also cool that Brian was in here earlier. Like I'm working on like my way of bringing the type of analysis that I do to this sector because there's a lot of data. Like there's tons and tons and tons of data, and it's kind of like on chain analytics as well. Like there's tons of information about what's happening on chain, but like not a lot of people really know how to make it useful or what's important or anything like that. So I don't trade NFTs, but I really would love to, but I have to understand how the market moves, like bring it into a risk threshold that I am comfortable with. Like, I can't just flip JPEGs because their picture's cool. That's just not me.
Yeah, not a good idea either.
I guess
So
I'm personally dangerously long on JPEGs. Like just to add my experience, what I realized is that if you can mint something with strong fundamentals and a good team, then you're very rarely going to lose money. So I
yeah,
just stick to
totally.
that. I just stick to that.
Like the thing that I just experimented on like recently and actually worked like in the analysis like from a forward testing perspective is like trying to not necessarily like look at an individual project, even though I want to do that in the future soon. But it's really just like understanding the oh my God, somebody's calling me. Sorry. What I'm trying to do is understand the market moves, like the NFT market like movements, because it's completely different than like the crypto market, like totally different
Yeah.
movements. So what I did was like my typical cycle analysis, like looking at OpenSea volume relative to like market buyers and sellers, and like trying to find when there are points where they diverged and like what that could have meant. And like I do believe that there is like a way to identify the inefficiencies in the NFT market and like bring that to a profitable like procedure that is like executable for everybody.
So
So
when
that's
you
And
say
there's I'm sorry, go ahead.
when you said diverge, do you mean the RSI versus the price action? Is that what you're looking at?
No, it wasn't that technical. It was like looking at like what I identified in the past, looking at the data was periods of time where there was high OpenSea volume and low new buyers and sellers. And like from a theoretical standpoint, that's like showing that new participants aren't coming into the market. So there's probably a not a FOMO. So why is there a bunch of volume? It's because people are either selling out of all their products that are speculative, or they're buying into blue chips, like people that are taking profits on something and buying back into like lower floor things, which would suggest that the price of Ethereum is probably lower, because why would they be, what they're buying has to be cheaper relatively for it to be like reasonable for them to buy. So like that's the kind of stuff I was looking at, and like I was like, okay, I'm looking at this window of time where there's forecasted higher volume and there's forecasted lower participants, and like also at that same time, like Ethereum was showing technical weakness. So it's like this looks like a cloud, like a window of time when like the NFT market will go to shit, and like sure enough, it did.
And Smurf, there's something that I want to go over you with one. Maybe we can go over it this weekend or something. But like when there is volume in the markets, you can use tools like icy.tools, and like they kind of have like price action, like dot charts of every NFT sale for specific collections. And like I know I profitably traded just using technical analysis like on those charts, like as well as I know people that do like EMA crossovers and setups like
Totally.
that on the charts, and they'll just use technical analysis on the floor price and trade profitably.
I have no doubt that that is like a process that could work. The only reason I haven't like really explored that with those tools, honestly, is just like the ability to export data. Like it would be so much easier if I could like pull that off instead of like making manual like calculations and stuff like that. It's just like a time wait, like a trade
Yeah,
off. Like I can't sit there and do that manually
yeah,
when I can do
I
it,
know there's ways. There's some things that you can pull off onto TradingView. I know someone who does it. I'll talk to them and see how they do, and that would just be an interesting thing to look at as well.
OpenSea, like, or what is it? Dune Analytics, they track like all the NFT like Ethereum based stuff. And it's possible to export that data there, but it's all like SQL databases, so it's like just a big ass warehouse of information. And I don't know how to use SQL like in to do like that kind of analysis. But like I'm sure there's a dev somewhere that works in SQL all the time. You'd be like, oh, you're an idiot. That's really easy. So like I imagine like in this whole group, there's a process to like go through to get, all this data and put it in a format to like make some really awesome products. But it's just a matter of like getting it set up and like finding those people to like work with. But yeah, there's totally, and like that's one of the best things that like goes back to my beginning part of like creating an edge. Like there's all this data that literally no one can use at that capacity, and like having that information and that like that little window that no one else has is freaking huge for like being profitable. Like you can identify the momentum in the floor price of something relative to the price of whatever and like find when it's starting to get money flow coming back in contrary to its floor price going down, and like that's showing that like, hey, this is set up for a reversal, we should buy this now at this point in time. It's just there's no end to the cool stuff that could be made
Yeah,
just
like
by
having an edge is so important, and I don't think people realize how even a small edge can add up. Like you look at the game of roulette, like casinos, they only have like a 50, like because of the green ones, the zero and double zero, they have like a 53% chance of winning, or I think it's like 54.2, something like that. And just that 4%, and that's them billions and billions of dollars a year just off a 4% edge. And like if you have that edge proven over time, back tested in your strategy, forward tested in your strategy, and you just stick to that and stick to the system that's proven to work, like in the long run, you'll win.
Yeah, cool. I totally agree, 100%. Back to some of the questions here.
And
Lucario,
thank you,
hi.
started for coming up.
Um,
Oh, I was just saying thank you, started for coming up, and I was just gonna send them back down to the audience.
Yeah,
okay.
thanks for the answers. Yeah.
I haven't taken this many
Um,
notes in my entire 4-year college career. The amount of notes I took during this.
sorry.
No,
How
thank
do I
you,
say?
bro. Thank you. It
No
was
worries.
incredible, honestly. Very, very value ingrained. A lot of gems.
I mean, the thing is, like, it's really like I think having the course that we're trying to make would be like really better for everything. Because like it's one thing to like take, and that's I kind of like brought this up to you before as well. Like an AMA is like
Yeah,
great, but like you can only like get so many gems, and it's not really about like having all the gems. You gotta like learn how to put it all together, and like that's
Yeah.
where the
definitely.
structure comes into play. Like
Mm-hmm.
learning how to learn and how to utilize all the tools is like so important.
Mm-hmm.
Privacy, how do you set your stop losses? Really, that's like being strategy dependent. Like a backtest result will say it's like price typically went below, 2%, every time I entered on this condition. So I would want to have a stop loss that's over 2% if I'm taking that trading signal. Um,
Mm-hmm.
so that would be one particular way. But if I'm just basing trading off of like price action, then you're looking at like structure levels. So if support pivots off of, or if a price bounces off a low support, like I would be setting my stop loss underneath that pivot point. The only problem with like doing those is it's like that's how everyone's taught to do it. So like that when
Yeah.
price gets back to that level, that's where you run the risk of a stop loss run. And it's just
Mm-hmm.
that's why it's tough to like just trade based off of price action because like you always run that risk.
Definitely.
You're just trading off support levels. My preferred setups, I think I already talked about that one. It's just divergence. Like I'm looking for um, divergence in line. Like I'm looking for divergence on multiple oscillators that are in ideally at like a support or resistance. If I'm looking for a short, I want there to be divergence on whatever time frame going into the resistance, and that would suggest to me that like price is going to fall. So that's typically what I look for. Um, there are different filters that I'll use sometimes, either like an EMA filter or like a higher time frame filter, but that's very situational dependent. Um, no, you already answered Strider. Don't trade NFTs. Book recommendations. The one that I think is like a good one is Technical Analysis on the Financial Markets by John Murphy. That's a good starter book because he talks about a bunch of different things, and he also talks about different strategies as well. So you can like get an idea, like without listening to a bunch of freaking interviews, you can learn about different strategies that might make sense to you. So that's like a good kind of starter in the stuff that I was talking about earlier. Most important skills for being a good trader. It's also going to be kind of a canned response. Risk management is probably the most important thing. Like taking a position, knowing that like once you hit that buy button, the money is gone. Like as long as you can accept that, when you hit the buy button, you'll be fine. And you have to consider like what you're doing like before you get into that position. Otherwise, you're probably going to end up like messing up the trade somewhere along the line. My mentor, I can't tell you who my mentor is because he's a very private person. His mentor was a trader named Stanley Kroll. And also, we like since he's also a psychoanalyst, cycle analyst, he learned from on and gosh, Edward Dewey. I don't know why my brain just like farted out on me there. Edward Dewey is probably one of the biggest pioneers in psychoanalysis, like bringing like psychoanalysis and the methodology that I study. Like it's not new; it's done in a bunch of different fields, but he brought it all sort of together and made the foundation of cycles for the study of the foundation for the study of cycles. Edward Dewey. He has like some very, 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 very old books, but like I didn't want to get too heavy into the cycle analysis because it's one of those like predictive models and it's not really makes or breaks your trading. Like the core concepts like the support and resistance, trend identification, momentum, like those are the things that are important. Those are the things that will like make the difference in your trading. Having like a model like for forecasting is like cool and all, but like that will not make you a good trader. Like by no means. Stanley Kroll is a very systematic, trend-following trader who has some really interesting strategies. He doesn't trade anymore. He died earlier in like the 2000s, but he was a really big trader, like in the 70s, 80s, and 90s. Like made a crap ton of money. It's a really good, no-nonsense way of shooting in the market. Is someone wanting to get into trading, what's the best way to start? And doing stuff. Use the resources that are here. Learn what price action is. Read through some of the suggested books that we've talked about. Set aside some like stable capital that you don't touch because you want to not rely on your trading when you start off as income. That's a really dangerous way to start trading. That's how it starts. About support, resistance, trend identification, momentum, management, and save, invest. Will SteadyStack have a mentor program? I don't know. That's a really good question. Very good question.
Los hopped out, but he could have touched up on the mentorship thing. But honestly, guys, you have so many people available to you: Brian, Privacy, many other master stackers, Titans that are very open with their DMs. So just feel free to reach out to any of them. Honestly, they've mentioned it multiple times.
This is probably like this is the best group that I've ever really sort of like been a part of because of like the limitless potential. Like it's amazing. I've never seen anything like it. Yeah. Do I use trading bots? Yes. Bots are amazing. Like number one, the market's trading 24/7 and I don't want to do that. I can't do that. So bots are great. Will they make or break you? No. But if you understand how to like implement them properly, they will help a lot. I do have a post that I'll copy and paste it into here that I put on Facebook a while back. Like there are times to use bots. Just using a bot like 24/7 is not the way to go. You have to understand what the bot is doing and understand when to use it. So like manipulation of like the bots is like more important to know than just like knowing the bot.
Yeah. Definitely.
Um,
I had a quick
what
question,
trade?
privacy, if
Go
you
for it.
wouldn't mind. Have you ever traded using tape?
No, I have not. That looks
Gotcha.
intense.
Yeah,
That looks really intense.
it's just yeah, it's a step ahead of
I
the charts, pretty much, I guess.
there was so Lois and I had a conversation about this one time. Like I did sit in on the AMA with Rippy, and I feel like I'm very nitpicky with my words. Like feel like
Yeah,
some things get lost in translation, and some things get misrepresented because like people aren't clear and specific in like what they mean. Like if you go and ask anyone, like ask 10 people what a bull market is in crypto, you'll get 15 different answers, right?
For sure.
So I don't like that aspect of it. And like one of the things that like kind of rubbed me a little bit weird in the thing about tape was like it's saying it's a leading indicator and everything else is like lagging. I wouldn't specifically call tape a leading indication. I would say it's like real time. Like it doesn't necessarily predict what is happening, but it in real time is telling you what is happening, where everything else
yeah,
is historic. So like you don't have
uh,
leading and lagging, you have real time and historic. So like a
exactly, yeah,
candle is historic. It's not real time. It's always something that happened in the past, where tape
uh,
is literally what's happening right now.
Okay.
yeah.
So I think that distinction is sort of important
So
from
you've
a
never
like.
really ventured out to tape reading, huh? You just stuck to your
Oh,
current methods.
well, I mean,
Gotcha.
I found, and like, there's nothing wrong, nothing against it. Like, I found a way that worked for me, and like, that doesn't involve reading tape, so like, that works. Like, I do recognize the value of like recognizing liquidity at levels. Like, that's huge, and that's very important. And you can't, like, you can get that from like the order books, and like, it's not reading tape, but like, it's the same type of thing. You're looking at the same metrics, really. Like looking at order book liquidity and stuff like that. Like, that's really
By the way,
important.
I don't know if you noticed, privacy. Lucario's in here now. He didn't get a chance. I didn't get a chance in let everybody know.
Can you guys hear me?
Hi.
Yep, we can hear you, my man.
Yeah,
What's
thank you
up?
for coming up, man.
Thank you. No, thank you for having me here. And I just want to say, like, first of all, privacy. Like, I love your speech and the way you explain things, and we can really see that you have a lot of experience, and it's really cool to have someone like you here. Um, and yeah, you talk great, dude. You're a very good teacher. Um, but I came here because I wanted to talk a little bit about, if you guys let me. I wanted to talk a little bit about like the fuck, I bugged out. My bad.
No worries.
Let me rephrase it. Reload the thing. Um, so basically, there was a question about how to start for beginners, like how to start when trading. And I want to talk about a little bit of my experiences that when you start, you gotta have the mentality that you will lose. Okay, even if you paper traded and you have a methodology that works like 70% of the time or 60%, which would be amazing. But even if you have a really good methodology and like in paper trades, like you're really good. Once you get in with real money, then like emotions start playing in. So get in the mindset that you will lose. So if you're going to lose, and once you do lose, that's how you learn. That's how you learn the most, is when you lose. So once you realize that, realize also that uh, you want to lose as minimal as possible. So when you start, like put so little that you don't even care. Like put like $10 on a trade. Okay, put $10 on a trade. That's my honest advice, because it's so little that you won't care, so emotions won't play like it won't affect your trades. And once you do lose those $10, let's say you got liquidated or something, then you can learn, okay, why did I get liquidated? What were the signs that I could have looked to close out my position? What were the signs that the market were giving me that the price was about to reverse? So if you're going to lose, just lose a little. And then
Definitely.
once you lose a lot of trades with little money, then and you start getting more and more confident. You learn a lot more from losing. And once you do start to make a profit, then you can like, and I'm talking months. Okay, I'm not talking days or weeks. I'm talking months after months. Then you can start scaling up a bit. That's my honest advice.
Yeah, no, I love that view of it. I definitely think that people should start. Maybe it's kind of like Privacy said earlier. It doesn't feel real until you start using real money. So if you are going to use real money and you don't have a lot, kind of like he said, have that like 3,000 or around that area to have like a good profitable account, then you gotta kind of get that experience with losing something you're not really going to care about, like you just said.
Definitely. And building off of what Lucario said, if you guys like you said, use a little bit of money when you're first starting out, and also paper trading. I'm not entirely sure if Smurf or Lucario touched upon that, but paper trading is a great route too, where you're just writing out your trades and not actually putting any money in the market, but you're just following the trade as you were actually trading.
Yeah,
I've
yeah.
done trades. I really enjoy them. It's good practice.
We have another request to speak by Spectral if you have the time, Smurf. I'm assuming they have a question.
Yeah. Thank you for coming up, Lucario, by the way.
Yeah, definitely, my man. Pleasure having you on.
It's my pleasure.
Hey guys, can you hear me?
Yep, hear you
Yep,
loud
we
and
can hear you,
clear.
my man.
Hey, very good. What's going on, guys? Hey, Privacy Lucario. I'm just curious about something. So, I've got full-time job, so I'm trying to trade on the side. I have the access to do it, and I've tried different ways. So I'm a member of some other servers, paid servers, where these guys are just these ultra high frequency traders. I'm working and I look and they're in and out of a trade 5 times, and I'm like, oh, I could have gotten into a trade. I'm like, these guys are in and out in 5 minutes, scalping basically. So I'm just curious, trying to figure out the best way to do it and still maintain my job and my income. Like you said, I depend on trading for income. So did you transition from working a regular job to trading, or did you just go right into it? And how did you go about doing it?
No, after I stopped working for the military and contracting, I had like time off doing nothing,
Yeah.
where contracting is quite lucrative, unfortunately, for taxpayers. Um, and I had time to do it, so I started off like while I was working a part-time job just to like
Mhm.
do something. It's going to be hard, and like that's the thing. Like one of the things that I've noticed is in the like copy trading world, like
Mhm.
no one really cares about copy trading longer time frames. Like it's all like you're talking about the scalpers and like really quick short plays or something like that, which don't really lend itself to like people working a side job. Most of the better like long-term higher time frame traders, the big good swing traders, like they're not really public, or they're not like making a bunch of stuff because it's like boring and it's not sexy, and
Mhm.
it's it's hard to really make content. It's like, well, we don't have anything to do today, guys, so um
Right.
it's really difficult. Like, and honestly, like high frequency trading, if you're trying to break into trading, is a really difficult place to start, in my opinion, because it like has the most room for error. Um, so honestly, if I would like, just from my experience, I would suggest like not starting off there. But like
Mhm.
it's good to learn and understand. Like most likely they're either breakout traders or momentum based trading. So it's like really great to see that and understand that, because like well, not right now, but in the crypto space, that's like a really, really profitable strategy. Like right now, since we're in like a choppy market, counter trend is better. But like momentum strategies in crypto is like really amazing. So like high frequency stuff probably isn't bad to learn for crypto, but I think it's a really
Mhm.
tough place to start, just because it is so time intensive and um, risky, if I was going to use a word.
Yeah. Yeah. Well, I mean, these guys are basically scalpers. I mean, they may be in a position for 5 minutes or 30 minutes,
Yeah.
and it's just crazy how quick they're in and out. I look away and look back, an hour later, and they've been in and out of 10 positions. I'm like, geez, I can't. Literally, no
Yeah.
possible way I can keep up with that. It's impossible. So,
That's
I
also
mean,
kind of what that's kind of where like the invest first part thing that I said in like the very beginning one, like just
mm,
start like packing your money aside and like following them and doing some trading in like the time available that you have. But
mm,
like I probably wouldn't spend like me personally, I wouldn't spend my time like learning that methodology per se, because like you literally can't devote the time to do that. Like it'd be impossible.
yeah,
So like you need to adjust to something that is attainable and achievable, because even if you do end up sicking enough money away where you have like a full year or two worth of like your salary like just on the side that can cover you if you just quit your job, like
mm,
you're still going to have like a long period of like learning how to execute at their level. Like it's not just going to be immediate, you're not going to be rolling in the dough right when you start.
right, right. So, would you say like doing like a swing trading or like a
Yeah.
day-to-day trading would be the way to go for beginners?
Yeah, probably, because it like lends to the time that you have available if you're like working
Hmm.
some other job. Like you got to make it fit to like what you can do. Like that's just the nature of it.
Yeah, yeah, cool, good stuff. All right, thank you, sir. Appreciate it.
Thank you for coming up.
Yeah, thank you, man.
You got it, guys.
The last question there in the chat was, what setup should we trade in the next 6 months going forward? This kind of touches on some of the analysis that I do. Like I think we have a decent way to finish, I guess. Like we have, in my opinion, like pressure, pressure for like the next month and a half. So like I think it's possible to have some long positions for the next month, but then we go into like a period of like after what is it? After like late June, around July, we start getting into like bearish pressure territory from a cyclical perspective. Um, I mean, like I said, I'm a technical trader. I trade whatever the market is like doing. Like there's an old Mark Twain quote, like everyone talks about the weather, but no one does anything about it. Like you just play the market for the direction that it's telling you. Like if the market's saying it looks like it's gonna rain, then just like you just get a raincoat, like that's it. Just do whatever the trend's saying according to like the time frame that you want to trade on. Like if you're looking for something to do for the next 6 months, like then you shouldn't be looking at anything underneath like the weekly chart, because like that the analysis that you would get from the daily market or a 4 hour chart or an 8 hour chart won't mean anything 6 months down the line. Like that's one of the things that like I try to teaching people like trading stuff. It's like keep your trade within your time frame. Like don't want to take a signal on the daily chart and then exit on like 15-minute chart, because like the 15-minute chart can go up and down 19 times before I hit like my target on the daily chart.
Yeah.
So it's like it's just not relevant. I think we have a month, like on a higher time frame analysis. I think we have a good month or so of like potential bullish pressure, but like technicals are going to dictate this. Like if we can't, break 40K, then like it doesn't really matter. Like you just got to do what the market's saying. Just follow the trend on whatever time frame that you're looking for. And right now, like you said, like the daily time frame's down, weekly time frame's down, monthly is still bullish technically. So like that's something, but who knows? Anything can happen.
Definitely. And I mean, I guess kind of like you said, I guess that's a good way to kind of end it. I just want to thank you again so much for taking the time, man. I know it's been it's been a long AMA, but thank you for giving everybody so much information, going over the metrics that you did and how to create a plan of attack. I think that's definitely fundamental stuff that people just need to kind of get into and touch just that they forget. They kind of go for the big home runs, and they don't, like you said, they kind of got to focus a little more on winning daily and getting a little better with it.
Exactly.
Yeah, like if home runs could happen every single time, like everyone would be a home run hitter, and like that, no one really realizes like RBIs is like a great fucking stat in baseball. Like you're a good player if you can score some RBIs. Like I
Yeah,
hate to bring in baseball stats because I don't really care that much for baseball, but like small being consistent and like finding the times to be valuable is like huge. Like it's not all about home runs every time. Yeah, making the bases every time will work for you. Um, I have a format here of like sort of what I wanted to cover, and I'll send that to you guys, and we can link it into whatever. So like if people didn't take notes or whatever, like they can kind of follow this loose structure that I carried out, and like this is
Also, I'm sure plenty of people
literally
took notes, so I'm sure you guys can
yeah.
share notes.
yeah, no, but that would still be awesome. I'll go ahead and
Yeah,
we'll get that
definitely,
from you in chat, and then I can post it in the chat here, and then also in the link, the thread link that relates to this place, and then that way everybody can kind of quickly find it. Thank you a lot for that.
yeah, definitely, my man,
I'll try and hurry up on the projects that I'm working for SteadyStack to finish those up and get those out to everybody because I think they'd be very helpful. And I'm really
for sure.
accessible. Like I sit around a lot in voice chat, come say hi, talk to me, ask me whatever. I have a newsletter that I write that's like every week. It's free. It's just like a weekly analysis of like what happened the last week and what I expect for the next week. And then like during there's a paid side to it, but like on the during the week I do like different things like either educational or like different trading ranges or like looking at whatever, just stuff. But like you don't have to do that. But like yeah.
Love
Also,
it.
I dropped
For
Privacy
thanks for
Smurf's
listening.
Twitter. Yeah, thank you, my man, for your time and your value. But everybody. I dropped Privacy Smurf's Twitter in the AMA chat. Go show him some love there as well.
Yeah,
Hate that.
and I know people have probably have a lot to go over in the recording too, so probably give them a little time to kind of digest all that.
Yeah,
No worries, no
definitely.
worries. And this
And you
this is
guys,
literally
any
just like the beginning. So there's plenty more that like I could go over and talk on. Like there's no end to it. So
Yeah,
for
don't feel like
sure,
you have to digest everything now. And you know you have forever to learn. So just take your
exactly.
time with it.
yeah. Also excited
And
to have you up, sometime soon, and no rush with anything that you're working on. Good things take time, so definitely knock it out the park. We'll all be waiting here for that.
definitely would love to have a Privacy Smurf series here on the AMA, or maybe something different because you said it's not usually the best model.
It's I don't know. We can figure out something. We have a bunch of smart people here.
Definitely,
For sure,
yeah.
for sure. Also, guys, this was quite a long AMA, so yeah, it's gonna be hard to digest. It's gonna be in the AMA archives within a few hours of once this ends. So be sure to check back and rewatch and reabsorb anything you missed.
Yeah, and then again on that note, thank you again. This was Privacy Smurf with Trading 101. We'll be having him up, sometime soon, and he'll be able to hopefully do this on a regular basis, kind of drop all that alpha on us constantly. But thank you again, brother, and thank you, Ali, for hosting with me. Always a pleasure, man.
Of
You
course,
guys are
thank
doing a
you
great
guys.
job. Appreciate all your
Thank
hard
you.
work.
Appreciate
No,
you,
Thanks,
brother.
SteadyStack for
Hondro's steady sex Gandalf, my man. He is.
nice.
No, I
Sweet.
appreciate that, man. It's honestly great being able to talk to, just everybody like you, Brian, we're gonna see about having four of a kind soon. I know we kind of have some other setup. We also have another one with
We have Litz
Saturday.
coming up this
Yep,
Saturday.
Let's coming up
Litz.
Saturday. So yeah, definitely awesome being able to just kind of chat with you, and honestly, the different perspectives that you guys all give with how to trade or how to look at the market or how to just kind of go about stuff is honestly awesome. So definitely always a pleasure.
Also a good thing to remember. Like there is no one right way. Like as long as you're consistently profitable, it doesn't matter.
Exactly. And also kind of like to touch up on what you said about finding kind of somebody who thinks like you. I think that's what I like the most about having the difference AMA here is that, maybe somebody doesn't agree with what you think, but maybe they do with what Brian thinks or vice versa, and then that way they can kind of just follow and kind of see which approach they can kind of go about that. So definitely keep that in mind too, guys.
Yeah, totally. Because like my mentor, like he does his one way, and like it's great. But at the same time, like I've also adapted it to be like my own thing off of him. And if he looked at it, he'd probably be like, "What the hell are you doing? That's horrible," you know. But it
Yeah.
doesn't matter.
Yeah, no, exactly, and that's the thing. That's when you start. I always like to keep in mind like the B in billionaire starts a builder. So once you start building your own formats, your own ways, that's when you kind of start, you know, crossing that threshold. But yeah, thank you again, brother.
Steady stack.
Yeah, and thank everybody for listening in. That was the no long AMA, but definitely seen some people here since the beginning. So appreciate you guys always for sticking on.
Yeah,
You
for
guys have a great
sure.
day.
All you guys are being noted, by the way. You as well, my man. Thank you.
But yeah, all right, brother. Thank you again. Have a great day, and yeah, we'll have the recording up soon. Thanks, everybody.